Welcome to StackedBid.com, and this is going to be the second episode of our Study Sundays. And as promised in our last video, what this is going to be is we're going to give you guys tips on strategies that you can build with the previous video that we made, which is how to calculate support and resistance levels for stocks. On this one, what we're going to teach you is strategies that you can build with the support and resistance line. We're going to talk about swing trading, we're going to talk about daily trading, and then how we find the strategies that we do for the swing trades. Again, this is a weekly series, and what we plan on doing is how to calculate support and resistance levels for stocks. Next week, we're going to do the strategy. So this is the strategy portion. Then the next week, what we're going to do is we're going to do a MACD indicator, and then after that we're going to do strategies for it. So that's kind of the outline of what we're doing on our YouTube channel, just really providing free content to just increase the exposure and studying for traders. So let's go ahead and get right into it. So as I said, this is going to be kind of strategies behind how to calculate support and resistance levels. So let's go ahead and start with the support for swing trades. All right, and so what I have here, something that we actually got into March 13th. The reason we said to do this around this level of the 313 is because this $19-20 mark was clear support off of the bounce after a big 20% move in 2 days. So also, as you can see here, so this is kind of why we had that $20 support level, because this was actually resistance back in June of 2018. As you can see here, it tested multiple times to try to get over that $20 level. It kind of failed to get over, and then one day just spiked from $19, $18 to $22. So that's kind of why we put the support level at 20, was not only because did it catch right here off of that crazy 20% move. So it caught here at support at 20, and then we saw this bounce again. So we saw the 313 mark. What we saw was an opportunity to really get in for this stock. And so as you can see, we bought it around, let's say 20. We bought it around 20, and then with a stop loss around 19.5. The reason being is because this is a support at 1982, but you don't want to put it at 1982. Reason being is because it could be a fake out breakout. And basically what that means is that it goes past the 1982 line, and instead of breaking like this one did up here, what it does is it could, fake you out. So that's why we kind of had a stop loss a little bit below that resistance line. And as you can see here, what we did was that stop loss would have been a drop of 8%-ish from our opening price. And instead what we wanted to do was we have a profit target of 25 because we want to see this gap fill from this day. So what we did is we risked 8% to get 25%. As you can see now, it is working out pretty well. So we're going to continue to monitor this stock. And so that's one support example for you. The next one we have is AAL. On here, same thing. As soon as this line really approaches the support line multiple times, you can see, so here, support, and as you can see, it really ran up quite a bit from that $31 support line. So we see a run up there, and as you can see, it tests it again, runs up, tests it again, runs all the way up. So what we said was to test it in here, get in at this level around a $31 entry. And so after the $31 entry, we said, hey, let's put a stop loss a little bit underneath this $30 line. Let's put it down to $28.91 because of this candlestick right here on January 3rd. And what we were risking there was 3%. So from this line, here's the 30 down to, and so we were risking 3% there to really gain what we saw. This move here is what we kind of expected and what we wanted. So we entered around here because it was approaching that support level with a stop loss down to here. So that would be about 3 to 4%. And what we wanted to see was this move right here that we saw in the early parts of 2019. And so we're still in this one. We really want to see the upside up to 23%. That's really what you want to see. You want to at least double your risk. So if you're risking 3%, what you want to do is at least have a profit target of 6%. That way you can double your risk, stuff like that. So as you can see, this is kind of another support example. And so now we'll go ahead and switch over to resistance, because I think you guys kind of get the picture of when it approaches that support line, you want to kind of get the buy-in around there and then put a stop loss to minimize your risk and just watch the stock run. I do want to say this is not something that is 100% accurate every single time. Sometimes, let's say we put our support at 30.37. So right here, as you can see, this is support. This was not a fake out breakout. So if you had a stop loss here, it would have minimized your risk and you would not have lost almost, $4. So again, it is not a proven strategy, but it is, if you do implement the stop losses, it is something that it could be profitable with the right picks. And so what we're going to go ahead and do is go over to resistance. Now with resistance, as you can see here with WABC, this one, we saw it approach the $65 mark once, break down to 62.5, test it twice, break down to the $58, $59 mark, and it hasn't gone up since. So we see that it makes some big moves after it hits the top and bottoms. As proven on here, this one hit $51 and ran all the way up to 65. So what we saw was an opportunity here. We saw 65 as, that resistance that the buyers could not push through the sellers. And so what we saw was an opportunity here around in early March for a shorting possibility. And so what we did was we went in at around 65, and not 4 days later, it just went all the way back down to 60. So again, here, these moves, whenever it approaches that resistance, you kind of want to get in at the top, set a stop loss. That way it minimizes your risk. What we saw for this stock was WABC. We wanted to minimize our risk. So we went with the $65 mark, and for our stop loss, we went a little bit above kind of where this line is, let's see, 65. So I think we did a $66 stop loss on this one, just to, again, minimize our risk. So that would be about a, 3% there. And instead, what we saw was an 8% return from this short possibility. So we risked 3% to gain 8%. I really wanted to see this crack kind of down to this 58 level, but we got out as soon as it broke because it was a pretty big move. And once this makes some pretty big moves, it tends to make opposite moves pretty quick after. So that's what you want to look for, is as soon as it approaches this resistance, get in short for resistance, long for support, set that stop loss, let it sit there, because these will be kind of long swing trades. This one just happened to work out pretty quick, a 4-day, 5-day move, and we were out of the name and gained 8%. So those are kind of the swing trade opportunities that we use for our end. I just really wanted to show you what we use for, those strategies, support and resistance, ensuring that you're using those stop losses to minimize your risks. Now, you may be asking, how do we get these swing trade opportunities? Where do we go? So what I do typically on a weekly basis is I go to finviz.com, and what I do is I go to the screeners section, and what that does is it will allow you to go into the technical aspect, which is right here, technical. So if you click on technical, what it will do is it'll actually allow you to pick patterns. And so for support, what we look for is multiple bottoms and resistance, what we look for is multiple tops. So let's go ahead and click into multiple bottoms. And once you click on there, go to charts right here. And once you go into charts, it will allow you to see just a bunch of different charts, things that are setting up for multiple bottoms. So on here, as you can see, there are already some that already bounced off of the bottom. So these I would not get into, obviously, because it's not at the bottom. What you want to see is you kind of want to look for a stock that is approaching that multiple bottom line. So let's go ahead and filter through here. So on here, actually, BRN is one of ours that we're looking at. It is approaching its bottom, and that would be a big move for us, from 134 to 160. Not a lot of room there, but that's just kind of an area that we see an opportunity in. BTU, same thing. I'll click into here. That way we can look at it. BTU, multiple bottoms, multiple times, ran up to 30. So this is something that right here again, and since it is approaching its multiple bottom right here, this would be a good opportunity to get in and see what happens with your stop loss, minimize your risk, and just hold it and see if it will get back up to that $30, $31 mark since it is approaching that multiple bottom line. All right, so that's the swing trading aspect of it and how we are looking for strategies as far as that go for support and resistance and swing trades. Now what I want to go into is kind of the strategies intraday. We had some big movers this week, YRIV being one of those. So let's go ahead and go into a 5-minute chart for 4-4 because that's when it made its big move. Now, support and resistance is not only for swing trading, it also works in day trading as well. So 4-4 here, this is where it made its big move from 1.25 all the way up to 1.9. So big moves. And as you can see here, this is the intraday support line that it created. So you'll see here, it bounced off of there, made its move back to it. And then here again, made its move back to it. These are just intraday, what you can look for after that first bounce off of a line. This would be your first initial support. And as you can see, it bounced off once, and then on here, bounced off twice, and ran all the way up to 187. Now, you see it break what you see is you see it break that support line. So in our last video, we kind of talked about how when support is broken, it can actually turn into resistance. So on here, what we kind of look for is now it broke, so we're going to look for this as our resistance. So this is the intraday supports that we look for as well. So again, it is not just a swing trade strategy, it's also a day trade strategy because the sellers were not able to get past the buyers at that line. Let's go into a little bit more, that way you can see a little bit more examples of support and resistance intraday. So on here, 4-5, this was another big day. This was 200% move stock. So as you can see here, ran up. This is going to be the initial resistance because that's where the buyers could not push past those sellers. And so again, this is the initial support. So what we see in this channel from here to here, going from support to resistance, as you can see, it hit the resistance again, and then it finally broke past. So once it breaks past, what you want to look for is this is the new support now, and here is the new resistance. The reason being is because that is where that one broke, that's where that touched the resistance line, and here is your support, and it broke, and now it's the new resistance. And as you can see, it tested once, it tested twice, and then on the third time, it broke back down to that initial support line. So this is why I wanted to show you the intraday. Support and resistance, again, are the foundations of technical analysis. So a lot of traders have these levels on their radar as far as when they're looking to buy, when they're looking to sell. So again, it really works weekly, it works, swing trading, it works daily. I really hope this video did help you guys, and just, stay studying. The more you study, the more successful trader you will become. So please leave a like on this video. And if you're not subscribed, please click that subscribe button for us. It really helps the channel grow. And just remember, guys, the next brilliant trader is you. We will come out with a new video next week on our YouTube channel. We'll see you guys next time.